Larry Kantor is Barclays Capital's head of research, and he joins us now from their offices in Midtown Manhattan. Good morning to you, Larry. We had some good data points on Friday, and again today. We're closer to that Dow 11,000 mark. Stocks looking expensive to you at these levels?
They're not cheap, that's for sure. I wouldn't say they're overly cheap or expensive. I just think we're in an environment right now that's very good for stock prices and actually good for corporate bond prices as well. You know, these numbers are basically, I think, should remove all the doubters about the sustainability of the U.S. recovery. And yet we still have rates at zero, basically policies at crisis level settings, and that's real positive for stocks.
I'm looking at your notes here. You're short U.S. Treasuries, you're long volatility. Talk to me about how you're positioning yourself right now.
Well, as I say, I mean, valuations are no longer compelling, but the financial environment with economic recovery, especially in the U.S., really getting underway now, with rates close to zero and with borrowing levels in the private sector very low, it's kind of a good environment for all financial asset prices. Now, volatility has come way off and is, in fact, back to sort of normal. And that's a good hedge to these long positions in risky assets, because if some event happens, volatility will spike up, and some kind of event which could maybe take the markets down. But if volatility remains low, that is, investors' perception of risk remains low, and they want to take risks, that's very good for risky assets. Meanwhile, the big news is the Fed's no longer buying bonds out on the market, buying mortgage backs and treasuries, and that's bound to cause interest rates to rise a bit, so hence the short position in U.S. Treasuries, which also the economic recovery getting underway will contribute also to higher rates.
And you're not concerned that that lack of purchasing on the Fed's part would jeopardize recovery? I mean, are you? We heard from Larry Summers over the weekend that he thinks we're at escape velocity now in terms of the momentum being built in the recovery.
I mean, if you step back and look at how far we've come in financial markets, whether it's corporate spreads or equity market prices or bond prices, confidence in banks, volatility. I mean, it doesn't look like the markets really need the Fed coming in there and buying assets. That was an extraordinary event, an extraordinary policy the Fed undertook when it looked like the financial markets were collapsing, and it's just no longer necessary. And keep in mind, the Fed's no longer, not yet anyway, selling the assets. They're just holding them. But I don't think it's necessary anymore.
We've seen somewhat dollar softness lately. I mean, talk to me about some of your Forex positions and also your outlook here on China. Say the yuan is allowed to appreciate. What happens then? What's the spillover effect?
Right. Well, on currencies in general, I mean, I think if you step back and look what's happened so far this year, the dollar's continued to do better, as it has since late last fall. And we think that'll continue because, remember, the U.S. started out lagging this recovery. It was really China and the other emerging markets that led it. Now that the U.S. is getting going, we think it won't be too long before the market starts pricing in Fed rate hikes. And so the relatively better performance of the U.S. economy, relatively higher interest rates, usually bodes pretty well for the dollar. As far as China is concerned, China is the one major country where policymakers are actively trying to slow the economy. Now, to the extent they're doing this with higher interest rates and higher reserve requirements, that's a risk to the global recovery because, as you know, China is now a major player in the global economy. It led the way in recovery.
So if it slows down, it could be a risk.
Right, but if they do it with a higher currency, that's actually a much more benign scenario, because if the yuan's going up, it means other currencies are going down, which will help their exports.
Thank you so much. Larry Kantor joining us this morning from Barclays Capital.